All right, so I'm showing you a screen of what's called Trade the News. I'm not advertising for Trade the News. I could care less whether or not you get it. There's sources that are like it out there, other places. I'm using it just to give you guys a sense that I really feel that people either aren't around people that use it or have a source or they're way behind news that can and always will give you opportunities to do really well in a short period of time. Not everything that comes down the wire, in fact, 95% of it is going to be useless, but I went back to October 27th, a few sessions ago. President Trump, in this, they highlight when it's something that might be more important. President Trump in here reportedly leading towards naming Powell as Fed chair. Well, that was bullish because he is as hawkish as maybe some of the other people. So it created uncertainty into certainty. You know, if the markets are worried about him appointing a hawk, stock markets don't like that. You have to know that. You have to anticipate what would make the market go up or down. And this was at 9:01 on 10/27. We'll look at that in a second. As I scroll up, you could see most of it could affect individual stocks, whether it's earnings, could affect the overall indexes, could affect Asian markets more than our markets, European markets more than our markets, vice versa. But it's giving you a nice rundown, and anything that's pertinent usually gets squawked out at you. And so you just run through it and just understand how it could be important. But here's what's important. The anticipation of if something is, if there's comments on a particular piece of news, these comments will make us go up, these will make us go down. You anticipate so you have a really good concrete expectation. I bring this up because some people did catch and did really well. I think it was that Powell comment on the 27th, and others in the sell-off yesterday when it became apparent, we'll scroll up, that this was the first bump in the road with this tax legislation. You don't have to be an economist. You don't have to be a politician or a pundit to understand this tax policy. You don't even have to read the damn thing. You just have to understand that the market, number one, as a trader, the market, number one, is really wanting this policy to pass. It's been baked in for many months. In fact, after it finally passes, if it passes, we'll probably sell off. It'll be sell the news type of in dynamic, right? By the way, if it's highlighted, it's usually what Trade the News might deem to be more important than if it's not highlighted. That's the only difference. Usually every earnings that comes across also is highlighted, as you could see. So as I scroll up and we get into yesterday, we had that news come out, not about Manafort and the indictments as much as this guy right in here.
From Capitol Hill, as we anticipate the tax plan being revealed tomorrow.
Hold on, he's actually talking in my ear.
It's got the confirmation that the corporate tax rate will
Hold
be
on.
at 20% as the bill 25%.
I don't know. Could you guys hear that also? Probably not. It's coming in through my headset. It's about tomorrow's more revealing of this tax bill. So as we scroll up, let's take a look at this particular piece of news.
Davis speaking now, saying he wants to strategically accelerate the Brexit process. The UK is
This guy.
not holding up the Brexit process. Reiterating that claim. The US said otherwise.
Snuffleupagus, George Snuffleupagus. Nobody's ever heard of this guy. Now all of a sudden, everybody could pronounce his name. Yeah, just on cue, Trump is talking about this tax plan. Now, he said something just before I came on that didn't have a reaction because it was already priced in. I'll walk you through it, though. Hold on. I'm going to turn this off right now. because it's hard to talk and listen at the same time. It's hard just to listen, let alone when I'm talking. All right, so here, 10:21 Central Time. It always timestamps whatever it recognizes your IP address being in. So it's 10:21 Central on 10:30. It's yesterday. We had already sold off, and I'm repeating this because I think I could say this 10 more times and it would still help. We would be repetitive in the prop firm environment where if there was something that was moving us, it was talked about all the time, about the way it was said, when it was said, and remember, it was always referenced back to something that might have been important, something that was important, right? And it was always talked about in our morning briefing, in our wire, and then at various meetings that we would have throughout the week, that just always a reference back to something that was important. Well, this is something that was important, and we didn't say at the time this came out because it was just before the room closed yesterday. We didn't say, I don't know really what this will do or anything else like that. It was, this is going to make the right side of the market the downside. We were trading around what, 72 or 73 even. So if you close your eyes and we're in the mid 60s at that support, don't be surprised. That's exactly what happened. Doesn't mean you had to catch it. It means you just didn't have to be surprised you knew how to trade it. You're understanding this stuff as a trader, not as a voter, not as a Democrat or a Republican or a pundit, but as a trader. We're understanding how in real time these pieces of news could affect our price action. So this comes out at 10:21 yesterday. Then, and I'm writing down these times. The 27th at 9:01, all right? At 9:01 was the Powell comment. And then yesterday at 10:21 was the first report that the phase-in process was going to begin. Right now, I could seem really smart if I'm talking to some people who aren't maybe as into what's going on as I am. But I'm only interested in it, and you guys are only interested in it because it affects what we trade. But we could sound much more, intelligent about it than even someone on the news. And that is, in real time, we could have talked about this tax reform. You're like, well, usually with something like this, you're going to have bumps in the road. And last week or 2 weeks ago, when they passed a couple preliminary proposals as far as the budget, it created some upside for markets because it was closer to getting something passed. However, yesterday at around 10:30 in the morning, and this is if you're talking to other people, they had an idea of phasing in this corporate tax cut over the course of 4 or 5 years. Markets don't like that. It's just another barrier to get this thing passed. But then Mnuchin, who has a pretty wife and a pretty ex-wife, hard to do, but he does, comes in and he's not seeing a lot. Oh, that's not it. That's not the comment. I make sure I didn't say that too loud. I'm working from home today. So he came on, I don't know what time was this, and he kind of threw up a little resistance to that phase in. Here, it was this time. So 1 o'clock, 8 after 1 o'clock yesterday, 1:08. He comes in and he says in a few comments, the objective is not to have corporate tax phase in, but we will see. And we're going to take a look to see what the markets did for that. I'm going to show you. Like I've been talking about ever since this tax policy began. Number one, the markets want it. It's a big reason why we rallied. And number two, follow the bumps. There will be bumps in the road that go from we're going to pass it, we're not going to pass it. It's not as good as we thought. Those are very opportunistic moments. Know what those could be. You don't know what they could be until you hear them in real time. Like I couldn't have predicted that they're going to come out with some crazy 5-year phase-in plan that kicks the cuts down the road a little bit. But that's what it was yesterday at 10:21. Make sense? What's the next one? Now we know that one is a bump in the road. There's going to be another one. There's going to be another one. This whole SALT, and I didn't build any kind of slides to go over this, but hopefully you're taking notes. This whole, the three big states, Illinois, New York, and California, the Republican congressmen and women and senators, they don't want this tax bill or proposal currently written because it eliminates state income tax, which we have big state income tax write-offs. So then if you start eliminating state income tax, that's good for most states that either don't have it or have low rates, but it ends up being a tax hike for those that have it. So that's a bump in the road to get everybody on board, to get enough guys on board to pass this thing. Another potential barrier going forward. All right, so now let's take these three. Let's go back to the charts and let's take these three time slots. Back on the 27th, right? We had why ain't that working? I was going to do a manual. Back on 10:27, 9 o'clock in the morning, it was the remarks that Powell was most likely going to be the Fed chair. So when he actually announces them Thursday, the surprise is it's not Powell, but we would have already known that. It's usually yesterday's news when everybody else finds out about it. All right, so on the 27th at 9 o'clock, you've got this market to do this and then come back and then end up having a reaction. Oh, it actually starts back in here. Having a reaction with follow through until this long up down bar. And here's where it was. There was some context also. The fact that we had traded sideways leading into it. There was some upside potential buy stops above the top of this consolidation. These reds had already been used. So they get through it. And this was those comments. You can make your week or make your month potentially by reacting and knowing that something could come down the pipe. Why was Powell bullish? Because he's not as big of a hawk as someone else Trump could have selected. And guess what? The stock markets like doves. Whether it's right or wrong, doesn't matter. They like low interest rates. They're like spoiled kids. They like candy. And low interest rates is candy to the stock market. So you can see this market do what it was supposed to do. That was 9 o'clock in the morning on the 27th, 9:01 to be exact. So then we fast forward to yesterday. And I hope this isn't boring to people. If it's boring to you, you could always leave. But I don't think it's boring. And this is the substance of stuff we would go over at a prop firm. October 30th was yesterday at 10:21. We went over this in the room twice. We're going to do it again today, as well as the one after that. So October 30th, here it is. The NASDAQ was already weak about 10 minutes prior to this. Both markets were coming off their highs. They had a triple stack green edge zone that had been used a couple rotations as support. The NASDAQ kept falling out of bed, was really strong, then got pretty weak. Had a long up down bar and kind of a pattern to show you the upside was over with in there. We did too. Long up bar here, long down bar here. And then we actually put a bearish bar in here. Then the news comes out and the downside continued to be the right side. It was new information. The market wasn't ready for it. And that's the real reason why we broke, not because of the indictments. That was news 2 or 3 hours prior. We actually rallied after that. But we sold off and went into some good support in the mid-60s and then came out of the hole. And this is the first pattern to say that the hole or the lows might be in. Then at 108 Central, right here. Muchin comes in. He's the guy with the pretty wife and ex-wife. And he talks about, he's not the treasury, most people say he's the Treasury Secretary. We remember him a different way. It's easier to remember if I say it that way. So we come in and they rally. Why did they rally? Because it was the first, nah, we're not for that. But kind of left the door open but we'll see. So it wasn't just a straight up rally. That's why it went up and went sideways. It wasn't just that black and white. No, there's no way that we're going to be for that. However, it started to get priced in that the odds of them passing this with that phase-in period are lower and lower. This was the rally that we finally had going down into the close of the room, and now we've just steadily done nothing since then. There was only a few opportunities. It's absolutely imperative that everybody gets better, gets good and better, and keeps working on what could affect the market with one headline. Because that's got to be a tool in your toolbox, and it's got to be the most polished tool. It's where you're going to make your most money. There'll always be headlines that come out in the future that will move us. Some environments, periods, they come out left and right. Like in 2007 and 2008, almost every day there was huge headlines. Back and forth we went during the financial crisis. 2011. So when you get spikes in volatility, it's usually good fundamentals that are keep driving the market up, down, sideways, higher, lower. It's bullish, it's not, it's bearish. And if you could stay on top of that, and that is your most polished tool, you'll have a great year that year. You'll make your month in a trade. And I'm not going to say who, but a couple people have said they finally were able to do that with some of these remarks that we just went over. They made their month and next month in a trade. That's all I want to hear, is that people are turning the corner and are able to do that, because we all work our ass off for those 2 or 4 or 8 ticks, right? We work our ass off for that. And that's fine. That's good. That's trading. But to let the effortless ones go by is unacceptable. Now, I don't want to feel like I'm advertising for Trading the News. I don't get anything. Go use them, fine. I don't care. There's other news sources out there. I haven't done any research to find out if there's a better one, a cheaper one. They cost around $1.50 a month at $150. Like anything else, call them up, tell them that you want a trial, or I don't know where everybody's expenses are. To me, I think everyone should carry $500 or $600 a month in expenses to trade, because most people are you guys are doing it from home. You don't have an expense in commute and things like that. You don't have marketing expenses. Yeah, you got commissions and things like that, but you need some good resources. Trading Room is one. Being around, well, you guys are all Edge members, but a subscription to charts, and I don't care what chart subscription you use. I honestly don't. I want people to use the one that they like the best. The one thing that I have that is close to coming, I've been talking about this all year, is something that if it doesn't work on a platform you use, it should shortly. But it's coming out for a platform near you. And what's cool about this thing is that it's not hard to use. Out of the box, you'll be able to use it. I'll have some tips for you on how to use this thing to make it more efficient and open your eyes to it, because there's a right and wrong way to use it. But right out of the box, you'll be able to use this thing. There's not a learning curve. You know, what most plugins or features or software, there's a learning curve. It's like, hey, you know what? I like this thing, but I know I have to spend time learning the features, how to get around software. Is there enough good features for me to even invest in it? This thing, open the box, and you'll be able to start using it. I'll tell you guys first about it in a week or two. A couple guys I've had test it. One guy specifically, and I'll walk you through what they say. So the question goes back, is Trade the News the best feed? Sometimes. Any questions about this? I'm taking an edge meeting to do this because I'm trying to underscore the importance of the next headline, which I don't know when, and where it's going to be. Not could be North Korea. We're due for one of those. He's going over to Asia. When I say he, the president's going there late this week. Is there any testing going to go on then? Is it going to happen when the markets are open? You're going to know how to react to that. There's going to be some more barriers and bumps in the road with this legislation. There's going to be some votes that are, could be, if they don't pass this, they're going to have trouble, all that stuff. It's going to affect the markets. You've already seen it. Dave mentions it's better than RandSquawk, which is a similar service as Trade the News for political tape bombs. That's his opinion. Thanks, Dave. One of the first, we had this covered in a prop firm. We had a guy, I'll just give you guys a sense of this. We had a guy that he also traded, but he was also an employee of the company who was given all access to a Bloomberg terminal that the company had paid for. And he was really the only guy that knew his way around it. A real smart guy. A real smart guy and a real organized guy. One of those. And he was a good trader and very efficient, hardworking guy. And he had an economic background. And he was given a mic that went over to speakers to the office. He prepared from the various news sources we subscribe to that they put out. Goldman puts out some research, Merrill Lynch, and then we had a Bloomberg terminal, and we had access to Market News and Reuters. Those were the three big ones: Bloomberg, Reuters, Market News. So he had all these headlines coming up in front of him, and he would turn the mic on and squawk anything pertinent, including numbers. We all had Bloomberg terminal screens. We couldn't interact with the Bloomberg, but we had a screen that maybe two traders would have next to them, and they'd share just for the release of numbers and stuff. But he'd put out a morning wire at the beginning of each day. And the wire was maybe 7 or 8 pages thick. You wouldn't read it from front to back. You'd pick some different things that were interesting. He had a summary of the economic numbers that were coming out. And it was a way to prepare and get yourself ready to understand the flow of news. Well, was anything driving us? When markets are real slow, it's because nothing's driving us. The waters are calm. And what's it going to take for the waters to get wavy? Well, we have those drivers out there, and they'll create knee-jerk waves. And the longer it sticks, the more volatile it stays, But I really got to make sure everyone's prepped, and there is no, there's very little to no chance that, I didn't know that was going to, I don't want to hear the comment from this group, the Edge group, that, I didn't know that was important. I didn't know that was something that was driving the market fundamentally. And you guys know that. It's something that doesn't get taught generally in most education of trading news, trading numbers. Numbers aren't as influential to the markets as they used to be, but tape bombs, that's what we used to call them. tape bombs. And it could be a terrorist attack. And as unfortunate as terrorist attacks are, your job is to trade price. I don't give an SHIT what moves it. Your job is to trade it. But I want to focus on trade the news isn't something that I'm encouraging everybody to go out and get. Encouraging people to be aware of a source or something. So there's no excuse to. I guess the overall point of this meeting is there's no gray area as to what is driving the market, anticipating and knowing what to do so you diligently react to any kind of tape bomb that might come across. There is no thinking. There's no thinking that extending corporate taxes 5 years is bearish for stocks, at least initially. It doesn't surprise we broke 8 points. Pretty good move in just an hour or two. It's not surprising if North Korea shoots another missile over Japan if Trump is there, right? So if you kind of anticipate what could happen, it's not a surprise to you and you could react better. You know what to do if a guy slams on his brakes in front of you as a good driver, right? A good driver hits his brakes. He's paying attention, number one. A better driver always is checking his mirrors, knows his surroundings, and scoots over to the right lane because he knows he just checked his mirror, nobody's there. That's a better driver. So a good trader will sell that news yesterday and make some money. A better trader will sell it, hold on to a good piece because he knows there's a lot of meat on that bone. And he'll be patient. But it's not defensive trading, though, Carl. It's off. It's knowing when to get aggressive and having a more crystallized expectation, which means, man, this thing is not going down and it should. Because when you're trading news or volatility, the rule of thumb is the SOB should go ASAP. And if you're short, you just sold it, it's not going that quick. You want it to react quick, or else you're wrong and everybody else is going to be staring at each other. And it'll pop before it drops, if it drops at all. So if you don't get a quick reaction, there's information to be gleaned from that. What's important is to always focus on your weakness. And if everybody has a weakness, you know, and if you want to make your relationship with your spouse better, you have a weakness. If you're not working on it, it doesn't get better, it gets worse. So the trading is the same thing. Let me take this survey to help prepare for future Edge sessions. I have a few topics I want to cover before the end of the year, but I want feedback on what others would like to hear or see as we go forward. I think talking to other people in these interviews and hearing other people's step 1, 2, and 3 has been something very popular. But aside from that, I want to survey this. What do you feel your weakness is? You could be trading well and you still have a weakness. Think about it and type it in. And if you can't think of it, email me what you think your weakness is. I did this several years ago and it was really good, and it's important to go over it, probably more than we actually go over it. And just your weaknesses for trading. I don't care about your weaknesses in the relationship with your spouse. All right, John, but is it also getting out just the winners? There's some good stuff here. I won't mention the names either. Even though many of you might not care, I won't mention names. So don't let that keep you from popping it in. So one of them is perfectionism. That's a good one. It's not a good one, but it's common. We want to be perfect. And an analogy I could use is when you were single, you try to not go after the prettiest guy or girl. Go after the second or third. You don't need to be perfect, just close. Another one is confidence at taking either entry or exit signal. I'm not going to try to address all these. I'm just going to read them. Getting out of a trade too early. Not waiting for the right price, making price come to me after I have a trade in mind for whatever reason. Another one is I'm very patient and then get impatient. You're playing tennis with the word patience. I get that. Is the bias up or down? Should I be looking for longs or shorts? That one, you have to use the tools that you've learned in here and say, this is the only thing I'm going to look at to determine my bias. And don't worry about what the rest, if that's the right bias or not. Especially at first. Don't worry if you're that biased. Just worry about, are you seeing what you need to see to make that opinion up or down? And remember this. This is very helpful for everyone. Your opinion, there's always going to be people with the opposite opinion of yours. That's why there's people on the bid and people on the offer. So don't get too uptight when you're in the edge room or you're in the trading room or both, and I might have or someone might have a different opinion as yours. Doesn't make them wrong or you right. When you start getting into, I want it just to work this way, I'd be right, is when you're not trading or valuing price. You're worried about, you're taking it personal. You're worried about being right, you're in trouble. Don't worry about being right. If I worried about being right, I could never host a trading room. If guys who talk a lot in the edge room, one thing that has helped them a great deal, I can guarantee without even asking them, the guys who put their opinions out there have grown a callous to not worrying about being right. Is that true? To the guys who talk a lot in the edge room, you've grown a callous. You don't care about being wrong as much as you might have used to. All right, John, good luck. Another weakness is not trading enough. Looking at too much, that's a weakness. That doesn't mean you should know all the stuff that's out there to look at, but then you whittle it down to what you could recognize better. Most people look at too much. And the 10 things they look at, all of them could be great. It's just pick out a lot less and not worry about missing the other stuff. I didn't want to go over potential solutions to all these weaknesses, but they're good. Well, the thing that's always going to help people address weaknesses are visuals. Or I should say, the thing that's going to help people recognize more and miss less are visuals. So simple things like what we went over last week. If Mark is bearish and looking for a reversal, is looking to fade this pop because he sees a reversal, he'd be involved right now. And he'd have a pretty decent location. He'd know he's midday, probably make a little money and looking to scratch the balance, but he'd be involved after these greens got taken out, and he'd probably be involved on this bar. And he had a nice head start. Now, at some point, you pop the champagne, and you need to get it below this yellow line. But based on just the simple recognition, he had a macro bias that said, at some point, I want to fade this for X, Y, Z. And now he's just looking for X to get in, for greens to get taken out and sell it back to red or something. And the point is, if the visual is better, the recognition is going to be better. Common sense is, I'm hunting deer. Do you know even what a deer looks like? That's first. And while that's funny for people who hunt deer, they don't ask that question. Of course they know what a deer looks like. But in trading, they really don't know what a deer looks like. You got to be careful, Carl, when you try to impregnate a cow manually with your fingers. I've seen a lot of people lose thumbs. Yeah. So nobody would ask the question, okay, we're deer hunting, you know what a deer looks like? Because of course they do. But do you know how to handle a gun? You better. And that's a question that probably doesn't have to get asked either when you go hunting. You guys probably generally know how to handle a gun. But while that's no-brainers for hunting, it's not in trading. People don't know the simple things to recognize. That's why most fail. That's why the failure rate is high and will always be high. What does a short look like? What does a long look like? What does a reversal look like? And there's not very many right or wrong answers, but it's your answer. Whatever your answer is right. And be consistent with it. Bruce, are you here? I think the tool used that Bruce has been the guinea pig for will help that process. Am I recognizing one thing? Would you agree? I'll have Bruce on when we roll this thing out. A week or two? I know that, Carl. That's why I was talking about it. Artificially inseminate the cows, you put a big glove on, and it's dangerous, so be careful. I did. Thanks, Barbara. There's always an expertise in everything people do, and that's what you learned and are learning, the expertise of valuing price. Here, I was not afraid of being dead wrong in crude oil. I mean, it was right, but for a very short period of time. This was a long up down bar. I thought that this should hold. It didn't. It let out a lot of volume. You wouldn't have got murdered if you bought it. I figured this would be good resistance. And it really wasn't in here. And then something changed, got fast in here, and just got bullish. This is a tough sequence. And it takes a bigger man or woman to admit that you're wrong. Now, you should have been bearish to bullish, and you're getting spun around, and that's fine. You know, the market's a little better than you that day in this sequence. It's like baseball. You know, there's 9 guys, they're all professional hitters, and the pitcher's just got their number. Just can't figure them out yet. Then once he makes a mistake and gets bullish in here, it's not that hard to say it's bullish after it plugs through this. And that's kind of where we're at. But oil, we mentioned, was confusing this morning. Oil had all this 60-minute overlap. That should keep your powder dry. It's just every hour is going back and forth. So I guess it's not that surprising that it ripped through support resistance and changed its mind a lot. So I hope this session helped. Always talk about what is next, what's driving the market, passing or not passing tax reform legislation, North Korea, a bombshell in I think this is more of an outlier, but it would affect the market, a bombshell that there was collusion with big bad Russia. I think that's an outlier. Another one is some sort of outlier statement in tomorrow's FOMC release that they're maybe not going to hike rates in December, or they come off of that with the new Fed chairman. And then all of a sudden it's like, low interest rates even longer. I'm going to stop the recording now.